moving, but the tiny bit of interesting spot is the IT space. There's some bit of a buying that is coming in after this
little
dips.
breather.
Yeah, so the investors are buying on the dips and hoarding those IT stocks at current valuations. But besides that, yes, it is a weak market, and we had a very weak global handover also on account of the US-Iran conflict. But let's get started with the show and start taking your questions. And for that, we are now joined by Lancelot Dicuna, the Chief Investment Officer, ValueX Wealth Connect. And we are joined by Himain Kapadia, Technical Associate, DR Choksi FinServe, on the technicals. Hi, good morning, Lancelot and Himain. Thank you so much for joining us. And let's connect with the first caller for the day. We are joined by Parth Anand from Punjab, who's now joining us. Hi, good morning, Parth. Thank you so much for joining us.
Good morning, madam. I have two inquiry, madam. Equitas Small Finance Bank and Easy My Trip.
Okay, so he says that he has Equitas Small Finance Bank. He's bought it at 70, I believe. And what was the other one?
Easy My Trip, madam.
Okay, Easy My Trip. What is your question? Are you a long term? You want to hold it for the long term, shorter term? What's your time horizon?
I have hold in for 2 years back.
Yeah. Okay, so 2 years back. Let me come to you, Lancelot, for this. He's been holding it for the last 2 years. Equitas Small Finance Bank. He's bought it at 70. What should he do? And also Ease My Trip. He's not. What's your buying price for Ease My Trip?
16 rupees, madam.
16 rupees. Okay, so he's clearly sitting at a loss. What should be the way forward now?
So I think, when you look at the small finance bank sector, the stock is trading at about 1.16 times price to book value. And while there is a reasonably good growth going ahead, it is always the larger banks who will benefit because they can raise money at much lower cost and maintain their margins without taking higher risk. So my advice is that it's better to look at moving out of Equitas Small Finance Bank and move to a larger bank, probably State Bank of India or, maybe an HDFC Bank at this point in time. These two could provide you good returns on the upside as the economy begins to improve over a period of time. As far as the Ease My Trip is concerned, I think the valuations are relatively on the higher side, and given that you are going to see significant disruption in the travel industry for a while, I think one should exit even though it's at a loss, because you could probably put this money to work in better stocks, and that would generate higher returns going forward.
All right, so Parth, that's the advice for you. All the best for your investments going forward. But then let's take a WhatsApp question, and this is from Nitya. Tejas Network, is it a good time to buy at current price, short term? What should be the target if it's a buy suggestion? And Nitya wants to invest almost 2 lakhs in this particular counter. Himain, I'll come to you. How should Nitya strategize this? And also, are you recommending Tejas Network as a buy to her?
A very good morning to you, Kavita. Thank you for having me on the show. It's a pleasure. Well, yes and no. I am recommending a buy, but our investor needs to keep in mind, Kavita, that we moved from 315 to 530 in 4 trading sessions. We've had a protracted decline. Everything looks promising as of now. The confirmation will come after a few weeks. But as of now, there's almost 20-40 crores of volume happening. So obviously, stronger hand the bought. I would say spread your purchases. You can buy at 475, 435. I mean, this rise need to be corrected a bit. But yes, otherwise, I have a feeling a medium-term bottom has been made. And considering the fact that we've come down for almost 2 years, the longer-term confirmation will take some time. Medium-term bottom made, buy and decline.
Okay, buy on decline on Tejas Network. But Lancelot, I have to come to you for Tejas Network, because in a market like this, 60% move in the last 5 days on a counter. It's some crazy moves coming in on Tejas Network. But on the fundamental, it's very important to educate our investors also who are planning a long-term investment in Tejas Networks. While Himain is saying, an uptrend or a direction is yet to be confirmed. In the short term, it's a buy on dips. But what would be your, view of Tejas Networks in the long term?
So I think, if you look at it, the Tejas Networks has, received news that there's a large order, and that is for some telecom 5G network rollout. And given that, in the past they were struggling because there was hardly any sales and hardly any orders, this has become, this is sort of like a lifeline to the company. But if you look at, the price has already moved up significantly, probably over 50%. And while you have received a large order, the sustainability of future orders over the longer term is still an issue that needs to be, considered. And hence, one should be a little careful when trying to invest at something that is basically moving on news till the fundamentals actually improve. So I think one needs to be a little careful, but yes, you can look at, if you are a high risk investor and you're looking at a longer time frame, then one can look at buying at declines in this counter.
Right. So highly volatile and high risk counter that should be factored in before putting in all the money. Let's move on. We're joined by Mr. Joseph George on the phone line with us from Kerala. Good morning, sir. How are you doing today?
Yeah, I'm doing good. Apart from the market just falling apart.
Sure.
So yeah, can I move on to the question?
Yes, you can.
Yeah. So I'm holding 523 shares of Jio Finance with an average of 309.77. So is it a good idea to sell it or hold it off?
It's a short-term buy?
Yeah. I did it as a short-term buy, but now I'm planning to do it as a long-term investment.
All right. Lancelot, I'll come to you. Now, the ideal intention was short-term, but then now he's obviously turned into a long-term investor in this counter. What would be your recommendation? Average price is almost 306.
Right. So, Jio Financial Services is basically the demerged Reliance, Financial Services, and it has various businesses like the asset management business. It has, lending business, leasing businesses, and probably has a reasonably large AUM of almost about 20,000 crores. But if you look at these businesses, they are going to take a time before they can deliver both profitability as well as revenue growth. And given that, the market is facing some challenges, the valuations are pretty high. If you look at it, it's trading almost at 97 times its earnings. And even if earnings improve over the next couple of years, you're still paying a very high multiple on this stock. So at this point in time, yes, he is in a loss, but it would be better to move out and move to stocks that are more that have more steady growth, and sustainable growth. Given that you may earn a little lower, but yes, you will be benefited over the next 3 to 4 years.
All right. I hope the question was answered. Thank you so much for joining us. But let's move on to the next question. This next question is coming in from Nitya, who's Mohit from Ludhiana. He says he has a Reliance Industries. Is it advisable to buy Reliance Industries at these levels? He's not given us a time horizon, but we'll take a long-term view. Lancelot, Reliance Industries at this level, and of course, Reliance Industries was one of the biggest laggards besides L&T on account of the US-Iran conflict. But what would be your long-term view on RIL?
I think long-term view on RIL is that one should definitely look at accumulating the stock over time. If you consider that, yes, the refining business could be impacted now because of higher crude prices, as well as probably the logistics situation might not be in their favor. But these are shorter term, impacts. I think over the longer term, Reliance will perform as far as its oil business is concerned, as far as its petrochemical business is concerned. And now it has grown the retail and consumer businesses in Reliance, and at some point in time would demerge and look at unlocking in terms of coming out with an IPO for that business. So I think from a longer term perspective, yes, one can look at accumulating this stock at all declines. One can add small quantities and then slowly build up the position.
Keep adding small quantity, definitely. That's a thumbs up on RIL. But then let's move on. This is a question from Mr. Nikhil Sharma from Mumbai. And he's an intraday trader and invests in both short-term and long-term opportunities. He's holding 35 shares of Zensar Tech at 862. The predicted target is 965. He's at a loss right now. When is the right time to exit the stock? Heyman?
Assuming it doesn't have a big time frame, I'd say hold as of now. A bounce is around the corner. close above 575 should see a recovery coming in. Not much, but it should hold at least for some time more.
All right, so that's the view on Zentech. But with that, it's time for us to slip in ourselves now with me, Ankita, and with me, Kavita. And we are taking all your questions and getting them answered. The number is going to flash on your screens. Please do write into us on that number that's flashing on your screens right now. The buying price, the holding period, and your stock query, and we'll get them answered by our experts. So keep sending in your questions. So without further ado, let's resume with all the questions that you have been sending us. Well, this one's coming from Chennai. Yamini is writing. She says she has Zensar Tech and Data Patterns. Which one is good for the long term? And please suggest the entry levels. Lancelot, let me come to you for the better pick, and then we'll come for the entry level for that to Himen. Zensar Tech and Data Patterns.
So I think, from both these stocks, I would look at probably Data Patterns as a more, reasonable stock, although valuations of both are expensive. I mean, Data Patterns trades at almost 70 PE, and, it has a 11 times price to book. But it is also one of the fast growing companies because it is engaged in the aerospace electronic solutions provided to defense products, which are missiles and radar systems, and even to the space research segment of business. So yes, there is a good growth potential, but at this point, yes, the stock is expensive, but I would prefer Data Patterns as opposed to Zensar Technologies.
All right, let's move on and let's take this question. This is on Tata Motors PV, and okay, I don't have the name of our viewer, but needs advice on Tata Motors PV 500 shares. Current average is 469, and Tata CV 315 shares. Current average is 171. Wants to know if profit should be booked in Tata CV. Himen?
I think yes, one can consider booking partial profits in Tata Motors CV. We've had what do you say, a decent this thing. I would say book partial profits, not more.
There's one more on Tata Elxsi, the same viewer, and 6228 is the average buy price, holding 120 shares. Again, a short-term view. Him in Tata Elxsi.
Kavita, honestly, the stop loss should have been triggered. But yeah, I think it's a sell. It's in a downtrend on all time frames, daily, weekly, monthly.
All right, so that's the view coming in, but let's move on to a caller who's calling us, his name is Chandrasekharan. He's calling in from Chennai. Hi, good morning, Chandrasekharan. Thank you for calling us. Tell us what's your question.
Yeah, good morning. I'm holding Suzlon 3,200 quantity with the average price of 50.20 for the past 2 years. I can hold it for 1 or 2 years more. Should I average at this current price, or should I wait for more correction, or exit and enter later?
Right, Lancelot, Suzlon has seen some major drubbing. It's down almost 30% in the last 6 months. He's clearly sitting at a loss. What should be his strategy now? Should he average in, or should he probably cut his loss and get into something else?
I think, Ankita, we should look at cutting losses because, the fundamentals of this business, while it may appear to be attractive, it is still a very difficult and challenging business. So they are one of the renewable energy providers, basically wind, and they did start some amount of solar power as well, solar energy generation. But from a return perspective, the stock is struggling to see good revenue growth. The earnings, there's a lot of cost increases, and that has put pressure on margins. And if you see compared to its return on investment is pretty low at this point in time. So there needs to be some significant change in the entire business operation, which will justify maybe hanging on to this stock for a long term. And there are other alternatives which have come out in the market because of this correction in prices, where you can invest into other businesses which are sustainable and valuations have come off. So I would recommend that it's better to exit.
All right, that's the take coming in on Suzlon. But then let's take a question from on Shakti Pumps. This is Mr. Radhakrishna from Bangalore and wants to buy Shakti Pump for a period of 6 months. Heyman, what would you recommend?
I don't see anything compelling to recommend a buy because maybe the markets are that way. But once again, it's in a sell mode on all time frames. So at this point in time, I do not have a buy recommendation request the viewer to, send in a query again after a few weeks. But currently, no.
Lancelot, any particular take, or if not this, then anything else in some other sector? The time frame is 6 months.
So I think very difficult to see changes in 6 months for Shakti Pumps. It's trading at 18 times earnings, and while its price to book is about 4 times. So there's a lot of competition in this segment, although we have seen some improvement in the last couple of quarters. But since the stock had risen a lot during the mid and small cap rise, I think at this point in time it doesn't generate enough confidence for person to expect that yes, it will, the earnings will grow fast enough to justify the higher prices.
All right, let's move on to the next counter. Let's talk about Saibal Chakrabarti, who's writing, and he says he holds HDFC Bank since 2011 and he's bought it at a buying price of 175 rupees. And he says the price is not moving much since 2021. What would be the way forward for the next 5 years? An interesting question, Lancelot, especially in a market like this where, financials was the common consensus. It's the PSU pack that has moved. In the next leg, do you see the private banks to really catch up, and especially like a name like HDFC that hasn't really done much?
So Ankita, HDFC Bank had struggled for the last 2 years because after the merger of HDFC and HDFC Bank, there was a structural change that needed to happen in the liability segment of the bank because the housing finance had long dated bonds, etc., which were weighing on HDFC Bank's combined book, as well as certain ratios with RBI were, impacting its overall ability to grow. Now those have been sorted out. Also, there was a need for the bank to improve its technology platform, which it has done and invested over the last 2 years. So I think with these challenges behind the bank, you will see significant growth coming in going forward, especially with inflation and interest rates remaining on the lower side. The net interest margins should improve for the bank. And so having waited so long, I think it is better to wait for another couple of years and you will see the upside as well. So it will justify your holding.
All right, let's move on. And this is a question coming in from Ignatius from Kolkata, and he's bought 10 stocks of Indigo at 5613 and 10 stocks of Maruti at 15.11. He's a long-term investor. What will be the good level to average all of these? Heyman, what should be your take?
Average price for Indigo should be around 3950. The average level or price for Maruti should be around 13,450 and 13,100.
All right, let's move on to the next question. This is coming from Joshi from Thiruvananthapuram. He says, can he buy Alembic Pharma and Emami for the long term? Lancelot, Emami and Alembic Pharma.
So, I think Alembic Pharma is undergoing some amount of restructuring in its business, and it is focused on the API business, which is one of the key export markets. They export to both Europe and US. So there is a little bit of let's say uncertainty about what's playing out as far as the US is concerned, and given that uncertainty, the stock is also trading at about 20 times its earnings. So maybe one should look at waiting for some further correction if you want to look at buying Alembic. And which was the other stock which you mentioned?
Alembic, it was Alembic Pharma and Emami.
Emami. So I think Emami is is more focused on the domestic side of business. Still trades at 24 times PE, but we have seen reasonably good growth as far as its portfolio of various household products. It has BoroPlus, Navratna, Zandu Balm, which has been one of their leading products. So maybe Imami can be looked at, for accumulation at this point in time.
All right, let's move on. This is a question coming in from Mr. Mathur from Delhi, and Tata Consumer at 1207, TCS at 3871. He wants to know if this can be the time for him to sell. Hemin, what will be your recommendation?
As far as TCS is concerned, I really don't think you should sell now. It's oversold. Everything is built in the price. Corrective bounce is underway. If he is around the corner, sorry, not underway. So even if he wants to sell, I suggest wait at least for the month of March. A bounce, I think, can be expected actually.
All right, let's move on to the next question. This one's coming from Khurshid, who's writing from Delhi. He says he's already holding Paytm. Is this the right time to add more at the current levels? And he also wants your take on GM breweries. He's already holding at a buying price of 1,085. His question is, what should he do at the current levels? Can he add more? He mean Paytm at the current levels, is it advisable to add more, and also for GM breweries?
Paytm, I would say you add more at current and slightly lower levels. 1,000 and 922 levels to add more as far as Paytm is concerned. As far as GM Brewer is concerned, I think the level is just below 900. That's the level which the investor can add.
All right, that's the recommendation on both the counters. And with that, thank you so much, both of you, for taking time out and helping our viewers today. Thank you. Time for a short break, but then post that more on stocks and company-specific conversations.